Hey, welcome back. It's Joshua Bellinger of Countervest, and I have a trade I'm going to share with you in a moment here. And it was two names I'm going to walk through that have now, subscription businesses have been the boom. So why not have the pharmaceutical companies become the new subscription companies as well? So Pfizer and Moderna are two names that saw increased call buying. We're going to take a look at that, and I'm going to walk through one of them, why I think that's a little bit better of a trade, but we'll take a look at that. So we're going to look at Pfizer. Pfizer today was on fire. It continues to go higher. As I said, it's in the subscription business, and it's looking as if right now every 3 months to get the new jab. So we'll just keep that at bay, and we'll just talk about the stock here. So right now at 48.97, we're continuously seeing buying coming in here. So keep in mind right now what we're seeing is volatility and historical volatility at the same level. So it is moving, and volatility, it keeps moving within its reach here. So it's right in line here. Typically we see implied volatility higher than realized. So that's the interesting aspect here. So when we take a look here at the activity, there was some short-term activity coming into the August contract, which expires today, or not today, this week. And you can see here in that August 50 strike, that let's take a look. Yeah, well, August 49 as well. So the 49 and the 50 call. 49 on my that's interesting. The 49 on mine, and the reason why is because I'm looking at things that are traded at least 50% or higher on the offer here. So a lot of activity in the front month that expires this week on this expiration. We typically see stocks drift higher. And then the most interesting activity, and I've been saying this for the last few weeks, is this activity positioning out in November, December, and January. But today as well, a very interesting buy of 22,000 contracts that were bought in the November 60. The November 60. It's another $11 from where prices are here. another 20, just about a 20% move. Very interesting. But that's where money's flowing right now. And how high can Pfizer go? Right now, it's hot, and it's at this point, if you're going to follow the activity, and before hopping on here, well, I'm thinking of what do I do here? What would I do? What do I want to do? And some people would get long those calls, but that implied volatility will come in, and we could just break down where the skew is. And the skew right now is more risk to the upside than it is to the downside. So what I would do on something like that is, we talked last week, and we discussed a call ladder ratio. Something like that I would do, a call ratio. You got to buy something and sell the hell out of stuff above it. This one is not a stock that is going to move like GameStop or have a short squeeze. It's easy to borrow. Right now, it's just fear of missing out. But, this is not going to get taken over. This is one that you'd buy and then sell the hell out of stuff above it. So that would be the way to do it. But then you have to cap that risk, that margin that's required. Not really the best one. So the other one that came on the system today was Moderna. And Moderna, again, in the front month here, or the front month, the activity was focused on the 400 strike here, and 400 and 380, and we see 380 right there, and 15,000 contracts traded, and 55% of those traded on the offer. So these are actually some pretty decent buys. It's a $373 stock, so it's pretty not expensive. It's just a higher priced product. Every stock is, the relative terms, higher stock, it's just a different stock. So not cheaper. It's not necessarily cheaper or more expensive. It's just the fact that it's a higher priced stock. So on this one, this is a little bit more interesting, because what we have here is that we had a big move on this. So realized historical is much higher than the right now, where implied volatility is high, but it's not as high as Moderna. So when I see this is a little bit interesting. And we just had earnings here. So we had a pop-up, pushed up the earnings, and now it's holding back here at these levels. We talked about this last year. Let's fade that dip. And it's interesting at this point as well, because the RSI has dipped below that 70. And this would be something I'm going to look at tomorrow. All right, so this is what I'm looking at right here, trying to put something together. And what I'm starting out here with is how much risk do you want to take? I mean, the wider the spread, a lot of times most people are going to go tighter spreads and more contracts, and it's not the way to do it. It's actually to do it more, to do less contracts and wider the spread, um, because when you sell a put spread, what you're doing is uh, you're selling close and you're buying long, and the implied volatility, the skew, you're buying higher implied volatility on the other side of it. So it's not the cleanest way. There's always a trade-off. It's not the cleanest and the best way, but it is to you don't do it necessarily because of being the better approach. You do it because you want to manage your risk. And something on $373, I mean, this is you need some big pockets. You need some portfolio margin to be able to manage something like this, to have a spread that to be naked those puts and to have something. So I mean, how you do it is how you do it. So this could be a situation here. So you have a 10-point spread on this one, and you take in 367. You can open up a little bit more depending on what you want for risk-wise. I mean, you could look at a 337. It's not even traded there, so 335. Oh, actually, so you'd have to go from, it goes from 340 to 330. So if you wanted to take 20 points, you can take a $7 credit on that. And you know what you'd be looking for on this one is to manage it and to take at least 50%, if not manage it a little bit quicker. But that's what you're looking for here. So I mean, on the play here, on what I'm looking at is, you know, we continue to see this movement, this buying higher, this speculation that it's going to push higher. It's a hot stock, both of them. Moderna has been holding up a little bit, or has pulled back a bit here, and hasn't moved up as much as Pfizer, which money's rolling into there. But today we see this, and you know, this is a little bit more interesting, where if prices just kind of pan out and pause out here, we got time on your hand, and if it, you know, you see more of a dip. I mean, right now it's just a hot stock and hot place to be where money's rotating into it. So, you know, following the money is following the money, but doing it in a strategic way. And those would be the strategic way. If you're going to do Pfizer, do a call ratio. This one, do a put spread. So that's what I have for you. I wouldn't, again, it's not about following, it's not just about buying calls, especially when volatility is so elevated. It's a losing proposition. I mean, maybe intraday you could get a scalp on it, but it's nothing meaningful. I mean, if you want to make money, you want to get a chunk of it. So the Moderna trade is how you would be able to get a chunk. So that's what I have for you. And don't get shy because it's a $500 stock. That's a lot of people. They look for the cheaper stocks. There's opportunities. It's just, again, maybe just one spread and tighten it up a little bit versus trying to take 10 spreads and make it really tight. And that's what happens. And you don't make any money because the spread doesn't have time to, the volatility stays with it. Time doesn't really take away, or time does take away, but it's offset by the volatility. And you have all those other issues on there as well. So that's what I have for you, and I'll see you in the next video. Make sure to like or give it a thumbs down. We'll see you in the next one.